trying to get a sense of how the consumer is faring during this time of uncertainty brought about in part by all this discussion of tariffs and what it might mean for the economy. One of the areas they look at is the retailers. What are the retailers seeing? Well, today on Bloomberg Television, Ralph Lauren CEO Patrice Louvet said that demand for its signature clothing, such as cable knit sweaters, remains strong, even as the fashion industry is buffeted by tariffs and an economic slowdown. Let's break that down a little bit. Mary Ross Gilbert joins us. She's a senior equity analyst covering the retail space for Bloomberg Intelligence. She joins us from LA via Zoom. So, Mary, we heard from the Ralph Lauren CEO says he still sees demand kind of pretty solid. What do you make of his comments, and what are you seeing across your retail coverage?
Yeah, so Paul, we're seeing strength clearly with Ralph Lauren. When we look at the data for the June quarter, which they're going to report in early August, their sales are trending up about 20%.
What?
And that's just for the U.S. market. And the U.S. is about 42 to 43% of their sales. And when you look at the consensus, they're at 6%. So they're really hitting it out of the ballpark. And it's not just in the U.S., it's actually around the globe. So when you think about China, China is supposed to be having a slowdown, but not for Ralph Lauren. Their sales in the last quarter, which was the March quarter, it was up 20%. So they're really seeing some strength. And when you look at some of the other brands out there, I think you'll see some variability. You'll see some retailers kind of struggling. So on the value side, we saw American Eagle show some struggles there, but part of it had to do with some fashion misses. So it was really associated with execution. And then the other companies that are executing, we're seeing good sales trends. And so we're seeing off-price is still showing resilience. So we think the consumer really is showing resilience.
Where does Ralph Lauren make its stuff?
That is a good question, John. So about 20% comes from Vietnam. China is probably around 7 or 8% is what we estimate. So they've been diversifying. And of course, we just got the news about a week or so ago that Vietnam tariffs are going up to 20%, possibly by August 1st. They haven't set an exact date yet, and that's up from 10%. So when you think about non-China tariffs for apparel retailers, that's about 10%. And so then does this mean Vietnam at 20% is sort of the new, we're going up to 20% for non-China? Yep. And China right now is at 30%. So we estimate that would be an incremental 26 basis points impact. But if anything, Ralph Lauren has the ability to pass on price increases and to be less impacted. They have pricing power with their consumers. Their average price point has been marching up, and consumers are willing to pay full price. If you look at their Wimbledon collection, good luck trying to find something because a lot of it has been sold out.
So is that how you're approaching tariffs here, Mary, as you look across your research coverage of retail companies? Is the higher end will have a better chance of passing along price increases versus maybe something towards the mid or lower end?
Yeah, it's going to be a combination of how these companies are able to mitigate the impact. I mean, we certainly saw in 2019, remember 2018, 2019, Trump 1.0, most of these companies were able to sort of cycle past it. So even companies on the value side will look for strategic price increases. So they'll be very pointed in that, but they're also sharing the costs with their suppliers. So the suppliers are absorbing some of it. In that Trump 1.0 scenario, they actually absorbed half the cost. So there are ways to mitigate it. Obviously, focusing on your costs, continuing to reduce your costs. So all of those things. So there will be an impact this year, mainly in the second half. But then as we get, into 2026, most of these companies will be able to cycle past that and hopefully see some margin improvement, depending on how final negotiations come out on tariffs.
In the meantime, does resilient demand more than make up for any hit to margins? And by the way, parenthetically, I have to tell everybody, I think that's Ralph Lauren she's wearing.
I'm wearing Ralph Lauren.
Oh.
And that was coincidental.
I'm not going to say it's a conflict of interest.
I had no idea. I came in, but I guess I'm an example, but it's not really It's not me. When you look at the fact that they added 5.9 million customers,
I didn't mean to put you on the
past
defensive.
year, it's mainly younger consumers. So millennials and Gen Z love the brand.
Wow.
So you will be seeing it more and more on them.
All right, good stuff. And we're going to be talking to you more and more because as the retailers report, it's going to be really a good view as to how much they're taking in their margin versus how much you and I are going to be taking.
The CEO also cited for Ralph Lauren increased demand, not just like from the tennis set, but from what's that other sport that's kind of like
polo?
No, the
Cricket.
one that's kind of like baseball.
Oh,
Cricket.
Yes.
The cricket set.
Like, huh?
Yeah, exactly. All right,
My
Mary
cricket
Ross
wear.
Gilbert,
Absolutely.
thank you so much. Mary Ross Gilbert, she's a senior equity analyst covering retail for Bloomberg Intelligence.